Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. A rather ordinary Monday for Indian markets, and Indian markets still failed to capitalize on last week's monster rally. After a slow start, markets never picked up. There was some degree of volatility which was visible in oil and gas stocks, and individually we did see some result adjustment. That's about it, nothing more, nothing less. So after a flat day, what is the way forward for Indian markets? Let's discuss that with Sandeep Wagle and Andrew Holland. But before I kickstart the panel discussion, here's a look at how Indian markets moved for the day gone by. A quick market summary. Nifty, or Nifty Spot rather, has closed above 6,050 for the second day on the trot. Oil and gas stock or the oil and gas index today appreciated by another 1.5%, courtesy Reliance. Large cap IT stocks, they are looking slightly toppy and rusty, as some degree of profit booking is clearly visible in the likes of Infosys, TCS and Wipro. Reliance, even though numbers were way above estimates and brokerages by and large they have upgraded their EPS estimates and price targets for this calendar year by a good 10 to 15%. The stock actually had a lukewarm session. After a strong start, Reliance Industries closed almost at the lowest point of the day. ADAG Group stocks, they were in demand. So the beta in the market today was exceptionally strong. The top traded counter on both the exchanges was Unitech. In terms of volume activity, Unitech, Arcom and then Suzlon. Nifty gainers now, minus the oil and gas stocks. There was price action in BHEL, L&T, which had a big day, followed by Bharti. Some losers now, NTPC, Sun Pharma and Tata Motors. I would say routine profit booking. But the star pack today was the entire ADG group pack. Reliance Power, Reliance Capital, Arcom, Reliance Infra, all of them appreciated, and all of them appreciated by a good solid 2 to 4% on very strong volumes. Result impact, Reliance we've discussed, it had a okay day. But HDFC, which even though they came out with a good set of numbers, now most of the market men are of the view that for some of these financial names and consumer names, Q3 numbers are more like a sell-on news event, because all the good news is priced in, and markets at a time when markets are revisiting growth stocks, some of the quality blue chip stocks, they tend to underperform. Let's discuss market internals and market technicals with Sandeep Wagle and Andrew Holland. Gentlemen, good evening to both of you. Thank you for joining us. Sandeep, markets today have clearly failed to capitalize on last week's monster rally.
Well, Nikunj, I won't agree with that, in the sense that they have made a high, they have continued the rally. Yes, they have not been up, some Nifty has not been up some 120 points, small 20-30 points higher. There is no weakness per se. Reliance, you're talking of weakness, but it has opened with a big gap and then it has corrected. So I really don't think this can be read into as weakness. I would only say a mild correction at higher levels, or rather a better way to put it is profit booking, and the trend is very much intact. We can easily talk of a range in the Nifty of 6,000 on the downside and 6,150, 6,200 on the upside. So 6,150 has been our target, and I maintain that. And yes, we may struggle around that, and we may move for the next probably a few weeks in this band. We may not make a higher top before the budget, that is also quite possible. But there is no way one can term this as weakness.
Sandeep, but if I map market internals, the market breadth is just about okay. Volumes are not extraordinary. Stock futures are no longer adding rampant open interest. Do you think somewhere this market is either getting tired or could get tired?
Well, this has been the pattern for the last 6 months to probably 12 months, and I would term it as a healthy consolidation. I mean, obviously after the end of the day there is a night when one rests, so probably market is doing that, and probably the next leg of the rally will be stronger if there is consolidation. I mean, if there is a one-way move, it may not sustain. I would talk of it that way. So no, I really don't see any kind of a weakness. Yes, a 40, 50, 60 point correction on at any point in time is bought into, and this has been happening over the past so many weeks and so many months, and I see a continuation of that.
Dipin Mehta also joins us. Dipin, good evening to you. Dipin, at the current juncture, it is an argument of glass half full, glass half empty. The bulls are of the view it's glass half full because numbers are strong, policy news flow has picked up and global markets are stable. But the bears would argue that all the good news is in the price, and despite a strong news flow environment, this market has done precious little.
Well, I think you summed it up quite well. Is the question I'm on the camp of the bulls or the camp of the bears? And I would say that, with whatever we have seen recently in the new year, I think we have to conclude that we are getting more bullish than ever before. And I think the most interesting development has been the corporate earnings season, which has been, I think, quite excellent. So to speak, expectations are running low and companies are delivering beyond market expectations, and that's the perfect trigger for the markets to show more strength going forward. One thing what we've noticed is that corporate earnings, quarterly earnings also somehow follow a particular trend. So if a company starts doing better from one quarter, then it is very likely that next 3-4 quarters also will turn out to be very good, partly because of base effect, partly because of some of the issues which were there earlier in the earlier quarters seem to get resolved and growth is coming through. So if this is the first quarter where we are seeing some of the laggards starting to deliver on the financial performance side, then indeed it's very positive for this kind of mini bull run which we have seen. And maybe from this earnings season to the next earnings season, you will see a lot more participation, a lot more stock price volume action, and many more people getting quite excited about owning stocks than perhaps before.
Andrew, this question is coming your way. Now, good news is coming from unexpected pockets. First it was IT, and last week it was oil and gas along with Reliance. What are your thoughts on oil and gas stocks and especially Reliance after the numbers?
Yeah, Reliance has been one of our favourites. We've been suffering having it one of our favourites for the past few years, but obviously the buyback has helped the share price, and I think we were all surprised with those fantastic results. So I can probably see even with this rise today over the course of the next month or so that we'll start to see that price get nearer to 1,000 as we all become expectant of a move in the gas price going forward, and I think that would be the next catalyst for the Reliance share price. With the OMCs, I'm always a little bit kind of wary because the government can change what they give as well, and I think we'll see it as a gradual rise. I don't see this as a big bang reform. It's a great reform, but I don't see it as a big bang reform. So I'm a little bit sceptical about kind of chasing the OMCs right at this stage. I think we have to see how the next couple of months go and whether they're enabled to continue to increase prices. But I wouldn't be chasing at this level.
Well, gentlemen, in terms of specific numbers, tomorrow we've got HUL and Kotak Mahindra Bank. What are expectations from HUL? They'll just pop up on your screen. Sales for the quarter gone by could report a bump up of about 13.5%. 13.5% on such a large base is quite impressive. Profit for the quarter gone by, which is Q3, could also report an uptick of nearly 17.5%. Sandeep Wagle, today HUL has cracked below the 200 DMA. Do you think the big move in HUL is behind us now?
I don't think so. I think this is a correction which one should buy into. But yes, you can't buy into HUL taking a 2 to 3 month view. You have to take a 6 to 12 month view. In that sense, I am a buyer. But yes, if you are talking of a trade for the next 2 to 3 months, I think HUL will consolidate between 460, 480, where it may make some bottom over the next few weeks or so. And on the higher side, I don't see it breaking 520, 530. So 460 to 520 is the band over the next probably 3 to 6 months. And then it will take off and probably test the prior high of 560, 570. So I would buy it if I have a view of 6 to 12 months, not otherwise.
Dipinmata, at 550, HUL was a very expensive stock. But at 497, is HUL still looking expensive?
Yeah, I should think so. I mean, considering that, it's a marginal reduction of about 10% and the P ratio still continue to remain high. But that's not the way, one kind of invests or trades in these stocks. At 550, HUL was offering a high degree of safety of capital and better growth rates compared to other opportunities in the market. But the scene is steadily changing now, and we have several more opportunities opening up. many more themes for investors to chase. And in that context, I think Hindustan Unilever appears to be a little bit unattractive compared to some of the other, kind of secular kind of growth stories which are around. And investors are kind of moving away from FMCG stocks into maybe some of the more interest rate sensitive stocks, or for that matter some other stocks which benefit from recovery in the economy, which have been beaten down, which are available at attractive valuations. And that kind of churning, I think, is gradually taking place, which is why I do feel that FMCG companies, although they will deliver their usual steady growth in earnings, top line, bottom line, but you will see a period of peak compression for the entire industry, whereas some of the other stocks in the other industries may tend to give better returns.
Okay, apart from HUL, Kotak Mahindra Bank is also due to declare numbers. Numbers are expected to be strong. The numbers from IndusInd Bank and from HDFC Bank also were strong. What are the expectations according to the 18 poll for the quarter gone by, which is Q3? Kotak Mahindra Bank could report a NII uptick, which is net interest income uptick of 20% plus, and profitability for the same quarter, which is Q3 FY13, could report uptick of nearly 12.5%. Depend between HDFC Bank and Kotak Mahindra Bank, which is a better stock to own? Because if I look at the price to book for HDFC Bank and Kotak Mahindra Bank, there is very little to pick and choose from.
Yeah, then you answered your own question. Better to own HDFC Bank. It is a far superior performer, more consistent numbers following through, and with all the predictability which is there in HDFC Bank, which is not there in Kotak Bank. So it's a kind of a no-brainer. One should be looking at HDFC Bank. In fact, if you compare all the new generation private sector banks, Kotak has been a bit of a laggard. Maybe it's to do with their exposure to capital market. But by and large, even the bank per se on a standalone basis has underperformed most of its peer group. And I would say some of the old generation private sector banks, these southern banks which are in the private sector, it has, in terms of real performance, it has even lagged these companies. And it's just that, the valuation for historic reasons has been on the higher side. So, per se, I think the company has to do a lot of catch up in terms of, delivering on bottom line, top line. And maybe this quarter could be a turnaround quarter, but I would say the preference is more for other companies in the same peer group rather than Kotak Bank at this point of time.
I'm going to change gears and talk about a group, which is the ADAG group. RCOM today appreciated by 7%. Reliance Power was up by about 3% plus. There was price action and volume action in Reliance Infra, and Reliance Capital also appreciated on rather decent volumes. Sandeep Wagle, the pick of that lot clearly is RCOM, which today closed at the highest point of the day and was up by nearly 8%.
Yes, Nikuj. At this point in time, very, very clearly, RCOM is the best of the lot, followed by Infra and Capital are making a very similar pattern, so it would be difficult to choose. And both are talking of a upside of 5 to 7 to 8%. So I would talk of a trading upside. I would still not talk of a move of 15-20% from current levels, and one should buy into it on every declines. I still don't hold that view. I mean, I would book profits at a 7-8% upside.
Dipin Mehta, if United Spirits and Pantaloon were special situation stocks for 2012, do you think something like RCOM or Reliance Infra could be a special situation, group, or they could be special situation stocks for 2013?
Yeah, they could be, but I think a lot of it is event-driven. Street is expecting better performance than what it has seen over the past 3-4 years or so. More strength in its balance sheet, lower leverage levels, more certainty and predictability in their earnings, and overall, I think improvement in the kind of qualitative factors. Before one starts bidding higher and increasing the P multiples for such stocks. At the same time, I think some of the past mistakes in terms of expanding, making large-scale acquisition, large-scale greenfield projects, all these things need to get resolved, and there has to be some kind of, I would say, confidence that the management will kind of undertake projects, either organic or inorganic, which are within their financial and managerial resources, rather than just expanding for sake of increasing top line, only to see that all the resources of the group and the companies are stretched. So maybe it may be that going forward they may get more conservative, which is what we are looking out for. And in that respect, if that is the trend to follow, then these stocks certainly would turn out to be major outperformers over the next 2 to 3 years or so.
Andrew, I'm going to change gears and talk about some mid-cap themes here. For the year 2013, Andrew Holland, to your mind, what are your best high-risk, high-return mid-cap ideas?
Yeah, I mean, there's lots to choose from, that's for sure. You know, in the mid caps, I still, you know, we still haven't really, you know, taken our wallet out and started to say we need to be in mid caps. I still think it's a bit fraught with danger at the moment. So we're keeping the large caps. The large caps are performing well for us. I don't think it's time yet to getting into the mid caps, unless you have a very long-term view. I think there's enough money to be made on the large caps for the time being.
Some stocks and strategies for tomorrow morning, and for that today, let's start with Yatin. Hi, Yatin.
Well, Nikun, the first stock to watch out for will be Geometric, and the company has come out with the quarterly earnings today. The profit growth is at almost 7% on a quarter-on-quarter basis, which came in at close to 19 crores. However, there was a disappointment as far as the top line was concerned, which was lower by around 4% on a quarter-on-quarter basis. But if you look at the total valuations, analysts are anticipating that their EPS for FY14 will be in the range of 21 rupees per share. And if you look at the stock price, you know, almost 4-5 times as far as the FY14 earnings is concerned. So on that basis, you know, most of the dealers have been recommending for a short-term trade here. If you talk about the company, they have been doing reasonably well as far as the IT segments are concerned, and with a stable management backed by the Godrej Group, the stock looks attractive at the current level.
Sandeep Agle, what are your top ideas for tomorrow?
Nikunj, I would go with the buy in Adani Enterprises, which has given a very clear breakout. Stop loss of 268, target of 287. The second one is a buy in JSW Energy, stop loss of 71.50, target of 78.50. And the third one is a sell in Pantaloon, which has given a breakdown, stop loss of 248, target of 232. And mind you, all these ideas are not for tomorrow necessarily, but over the next 2 to 3 trading sessions.
The pin for the year 2012, you were investing in mid-cap IT stocks, you were holding on to your private banks, and you were investing in pharma. What are your top ideas for 2013?
It's nice to know that you've been keeping track of what we've been recommending, but I think that nothing really changes from 2012 to 2013. And I think one of the highlights of this earnings season has been the way tech has been performing. I think they've done far better than what we were expecting. And just about I was thinking of trying to go a little bit underweight in tech. I think I'll just wait for the entire earnings seasons to roll out and see how mid-cap IT companies are also delivering. And if they are, you know, decent performers, then I think that mid-cap tech also will continue to do well. So I think between these three buckets, we are more or less fine, and maybe you could add some of the NBFCs in the private sector, the likes of M&M Finance or Bajaj Finance, maybe L&T Finance, and even some of the gold companies, gold financing companies also look quite interesting. Although, you know, there may be some certain degree of discomfort as far as management is concerned in those companies, especially the gold financing companies. But I think more or less these are a good kind of, you know, industries to track, and I would think that they would outperform going forward.
Yatin, one stock down, second one from you.
Well, Nikunj, Reliance Power is one stock which is looking interesting at the current levels, almost trading at 1.4 times FY14 price to book value. Also, if you talk about the company, you know, there have been certain environmental clearance and RAND related issues which have been resolved. If you also look at the company, you know, they have been recently concluded offer for sale, wherein we have seen a decent amount of institutional participation and some bit of accumulation happening in the, you know, secondary market. Also, you know, the company is looking to seek a tariff revision as far as the 4,000 megawatt Sasan project in Madhya Pradesh is concerned, and any bit of clarity on that front will, you know, really mean a game changer as far as the company is concerned. Also, there are certain bottlenecks as far as the gas-based power project is concerned, and that is also expected to resolve as far as the medium term is concerned. So let's see how does the stock pan out going forward, and the CRC hearing is one thing that most of the analyst community is watching out for.
And before we wrap, Andrew, once earnings are out of the way, the center of gravity will shift from earnings to what Reserve Bank of India could do on 29th of Jan. What are your expectations from the policy?
Yeah, no, we continue to be, you know, favour the banks. We kept with the private banks. mainly. We have looked down at some of the PSU banks, but not overly convinced I should be overweight in this sector at the moment. So just nibbling around the ones that we like. We'll continue to do so, and as the economy starts to improve, then obviously we'll move to a more kind of overweight stance. But that's not for a few months yet. We're keeping with our defensives. We still think that's a trade which will earn us money over the year, but increasingly looking towards the kind of interest rate sensitive capital goods, and a little bit more at the power sector now. We think there could be some catalyst there going forward, but obviously we have to wait and see what the Prime Minister does, who's heading the whole push towards the coal supply. And I think until we have that in place, then we're not going to see very much for the sector. But just as a reminder, the telecom sector, which has been horribly complicated recently, has now started to become less complicated, and expectations are now that we're going to start seeing price increases from the likes of Tata, which will obviously help the sector from its kind of having no pricing power to pricing power again. So telecom sector, I think, is a little bit more favourable than it has been for at least 6 to 9 months.
All right, gentlemen, appreciate your time, and thank you for joining us on this edition of Markets Tomorrow. That's it on this edition of Markets Tomorrow. I'm Nikunj signing off. Thank you for watching this edition of Markets Tomorrow, and I'll see you tomorrow morning with the markets.